Welcome back to Central Valley Talk Live. I'm Austin Reed, coming to you from our Tower District studios inside the Mike Briggs building. Thanks for being here. It's October the 13th. Hit me up on Facebook, Instagram, Twitter, and TikTok at Austin Reed on Air. We are talking all about finances now. Joining us in our Tower District studios once again is Sammy Franco, co-founder of BFI Financial. I think I said, what did I call it before? BMI.
Yeah, something like that. Yep.
right before the live segment. BFI. What does that stand for?
Be financially informed.
Oh, okay.
So it's something that we found there's just a huge knowledge gap, and most people aren't informed on which way they should be going, what's even the best path. But it's all individual, so every case is different.
So you've been doing this for a while. It's so funny. Right before the interview, we were talking about your past, and you owned a restaurant.
Yep, and I did that since I was a kid.
Wow.
Thought that was my dream, and ended up, owning me. So,
You're always on call.
Yeah, and there's a book called Rich Dad Poor Dad by Robert Kiyosaki.
Okay.
And he talks about the cash flow quadrants. And so we talk about this with anyone who is looking at investing and growing money, is which quadrant you want to be in. Do you want to trade your time for money? Do you want to own a job, which is being a business owner? Or do you want to get to the right side of the quadrant, which is owning a system where the system works for you and you make money while you sleep?
Right.
So that's everyone's goal should be to get to the right side of the quadrant, own a system and become an investor of some sort.
Yeah, because I love that. I love that term. Make money while you sleep. There's nothing better than that.
Yeah, if you can do it safely, that's
Right.
that's even better.
So you're from Fresno, and BFI. Tell everybody what you help with. The numerous things that you guys do.
So we do anything from basic life coverage, which we hardly do that, but we do financial strategies where we fund investments out of safe vehicles. We do 401ks for large and small companies. We do financial strategizing for retirement, sequence of distribution planning, which is how you're going to remove funds. We do conversions where we convert taxable to tax-free, and basically we can lead someone from start to finish in their journey from where they're getting started to when they're trying to retire.
Here's a question. I do a number of things, and however, me personally, I've got a small business, and I'm a sole proprietor. And I was thinking about this actually just in the last couple of days, because beforehand I used to work for major broadcasting companies, right? And I funded my 401k. I kept putting in, for people that are sole proprietors, can you work with them?
Oh, yeah.
How does that work?
There's different things. Well, for sole proprietors or business owners, you can do like a SEP IRA, which is something that's made directly for business owners. You can even do like life policies that can protect your business with a life benefit, living benefits if you get sick, because there's nothing that can crash a business more than if the sole proprietor or the operator of the business is out of commission. Right. Can't work, the business, I say restaurant, see I keep going back to that. The business can't run. So when we put someone in a life policy that, one, provides equity and growth, and two, provides what's called living benefits, which is chronic, critical, and terminal illness riders. So that means if you have a stroke, if you get sick, if you're diagnosed with cancer, or you can't perform two of what they call the daily living functions, they'll pay you 2% a month of your death benefit. So if you've got a $500,000 policy, that's $10,000 a month you have to close any gaps that you have. Now, most business owners are required to have like $1 million, so now you're looking at $20,000 a month. Right. It's all tax-free. You never pay it back because it comes off of your death benefit. Right. So that's where most people aren't educated on how businesses can actually use insurance and use the death benefit while you're living if you need to. So we do that for businesses. But really every case is individual. So when we sit with someone, we go through a full financial analysis, what's coming in, what's going out, what assets do they hold, what are they already paying into. So for business individual owners, we work a lot with individual business owners. So it's fun to strategize because, one, I've been there, done that, and two, it's fun to help someone make their business succeed, because when you're in a small business, sometimes margins are slim, and you have to kind of create money out of thin air.
Right.
So rather than some people putting their money at risk in like a SEP IRA or a solo 401k, which are great options, some of them opt for a safer insurance option that still grows them compound interest, allows them leverage inside the policy, so you can borrow money from it without actually removing your money, so it keeps gaining it. So you get paid money on your loan, which is crazy. So when was the last time you went to a bank and got a loan and they paid you interest on the loan?
Yeah.
Never happens. Yeah. So that happens inside of insurance policies. They have to be structured correct, though. So, yeah, a lot of options for business owners.
I got to go to your office soon. Seriously. Yeah. I know you wanted to talk about a couple things,
yes.
So I'll let you take it over.
So we saw a very pronounced pivot point in the S&P chart. So they've been projecting now, October, November, kind of a pullback. So there was a dip, but now you're seeing lower highs and lower lows. So that means when there's a dip in the chart and the next high doesn't go past that first dip, and then it drops again, and then the next low isn't higher than the last low, it's kind of in a little bit of a pullback. I know there's a lot of the debt ceiling talk that's going on and what could happen. So people are getting a little bit more conservative. So what I wanted to go over today is a different option, and what you're seeing on the screen there is going to be from one of our partners that we work with, a company that actually has a safe investment vehicle, which is called a flexible premium fixed indexed annuity. So when people hear the word annuity, usually they run for the hills because they're thinking like, oh, grandpa and grandma got burned on an annuity. Well, they've come a long way. I don't know if you guys have ever heard of a bank or institution called BlackRock Financial. So BlackRock Financial is a huge global investor. So this partner here that we work with, they actually invest in their indexes. So whereas like an annuity where people might have thought, years ago where you put money in and it's going to grow at like 2 or 3%, pretty much like CD rates. These ones here, you can link it to the S&P 500 ETF. You can link it to gold. You can link it to real estate. So in these, there's different equities and different assets that you can link your growth to. So not only does your money grow safely linked to those indexes in the market, it guarantees you zero principal loss. So it's called an indexing strategy, so you're not directly invested into that stock or that ETF. The company kind of, in easy words, they kind of match your money and invest it for you and use what's called a participation rate to help you participate in the market's gain. In that one there, participation rates are over 100%. So like one of them, I believe, is like 140. So that means if you return 10%, that 140 participation rate turns it into a 14%. So there's a lot of features in these that they're safe, zero market loss risk, and it's not like a normal annuity where you just lump sum it in and you can't add any more into it. You can continue paying into this. So if someone has an old 401k, they can roll it into something like this and continue funding their flexible premium fixed index annuity without ever risking losing any money. So that's the biggest thing, is when you look at, like we have a chart that compares the S&P return from 2000 to the end of 2020. And everyone says the market average is 10%. Over time it does, right? So if you stay in long enough, you're 10%. It's going to be an average of 10%. But when you factor in losses over the last 20 years, it's really returned like 5.6%. So in an indexing strategy where it has what we call a 0% floor, it would have returned more like 8.7%, because all those years where the markets would have dipped, it would have just locked you in at 0%. You don't gain anything, but you don't lose anything that year. So when people are starting to look for safer strategies, sometimes we roll funds from one qualified account into another, and this would be a good example of that. So that's just an idea of what we do. And again, BlackRock Financial, if you haven't heard of them, like Google them, they're huge. This is their iShares portfolio, so they're super advanced when it comes to these kinds of strategies.
Anything else you wanted to touch on today?
We also were going to talk about just diversifying into your retirement, like sequence of distributions. Okay. So we get a lot of people who come to us for planning for retirement. They don't know where to start. What do I have? I've got a 401k, my company's going to pay me a pension, and I have an IRA. That's great. All of them are going to be taxed at income tax rates, which is the highest. So many people will say, well, that's okay because by the time I get into retirement, I'm going to be in a lower tax bracket. Everything's going to be paid off. Life went 100% according to plan. Never happens. Yeah. So the purpose of meetings with those people is to start to look at how we can convert taxable funds into not tax funds in retirement, because the less taxes you pay in retirement, the more you put away. So it's an old saying, it's not what you make, it's what you take in income. So Roth conversions are great, but planning that out, because knowing your tax bracket, you don't want to cause higher taxation of anything. So that's huge. So if you guys haven't talked to anyone about a financial strategy for retirement, everyone plans on how they're going to build the biggest pile of money, but nobody, well, I would say nobody, hardly anybody ever thinks about how they're going to distribute it. So that's where you can lose a good portion of your retirement to taxes, unnecessary taxes.
People can learn more at BeFinanciallyInformed.com. And then what's your phone number?
559-250-5680.
Sammy, good to see you again.
Nice
see
talking.
you next time.
Thank you for having me back.
All right. Sure. Very good. Thank you so much. I'm Austin Reed. You're watching Central Valley Talk. We'll be back with another guest live in studio coming up in just a couple of minutes, so stay with us.